So today we are back at the whiteboard with another video going over just how powerful specific identification is compared to FIFO. Now we're going to be using an example from a client that we recently had who's been collecting XRP for the past 5 or so years. He's been buying when it's really cheap, buying when it's really expensive, and we walked him through exactly why it's so much better to use specific identification instead of FIFO and how much money it was able to save him. It was thousands, it was a lot. So we will whiteboard it out, we'll go over it all. This doesn't just apply to XRP, so it's for all altcoins, all crypto. If you are buying at various different price points, you certainly do not want to be using FIFO. You should probably be checking out specific identification, so stay tuned. So we've written out the scenario, we've simplified it a bit, but this is inspired by one of our actual clients and their actual data. But as I mentioned, they were buying at various different price points for the past 4 to 5 years or so. And so as you can see, they started purchasing pretty early on, and he purchased at just 25 cents, so very, very cheap. He'd got like 3,000 XRP at that point. Then he went and purchased a bit more at 50 cents, 2,500 XRP, so on and so forth, collecting his bags over the years. Ultimately, in December 2024, so this year, just recently, he sold 3,500 XRP at a staggering $2.50. Hopefully it'll go higher, but as we can see here, that was definitely quite a bit higher than what he was purchasing for. So we know we are going to have a capital gain here. So the question comes down to, how can we optimize this? How can we make sure that his capital gain is the smallest amount possible so that he can keep the most cash in his pocket and pay the least amount to the government while staying compliant? So as we know, the equation for capital gains is pretty simple. So capital gains equals your proceeds minus your cost basis. So pretty simple equation. That's really not too hard for most people to grasp. Your proceeds is the amount of cash you get, or if you swap one crypto for another, so maybe he swapped XRP for Ethereum, it would be the fair value of the Ethereum that he is receiving. That would be your proceeds there. So in this instance, when he sold 3,500 XRP for $2.50, that means his proceeds was $8,750 total, okay? So we now have a problem with the cost basis. He didn't buy just at one point. He didn't just buy once and then never again. He bought at various different price points. So there's this idea called a cost basis accounting method. So what that means is of these 4 different price points, which one do we use to determine his cost basis? He sold 3,500 XRP. Did he pull from here? Did he pull from here? So on and so forth. So under the first in, first out method, or FIFO, that basically says you should go in the order in which you acquired them. So he sold 3,500. The first 3,000 of that would come from this tax lot. The next 500 would come from this tax lot, and so on and so forth. And so if we were to use FIFO for this, ultimately what we would do is we would say the first 3,000 came from that amount. So we'll just do the math here. So 3,000 times 0.25, pretty easy, $750. And then the next 500 came from this tax lot, which he bought for 50 cents. So next 500 times 0.5. So overall, and I'll just write out the math there. So if we were using FIFO, it would be 3,000 times 25 cents equals 750. And then down here, just 500. So 500 times 50 cents equals 250 for a total of a $1,000 cost basis, okay? So if we were using FIFO, and I'll just kind of separate this here. If we were using FIFO, his capital gain would be $7,750, and this is for FIFO, first in, first out. So as we can see, we have his proceeds, we have his cost basis as calculated right here, and now we have his capital gain. But I want to show you just how powerful specific identification is and how we can reduce that capital gain and overall reduce his taxes. So I went ahead and I erased the math we did, and now we're going to be doing specific identification. So we'll call this spec ID. And so essentially, these are your only two allowed methods, per the IRS. Now, you might have heard of some methods like HIFO or anything like that, but really that's looking through the lens of specific identification. You can look at the IRS FAQ. The only two methods allowed are FIFO and spec ID. And so you do have to meet certain requirements in order to do spec ID, but as long as you have all the data tracked, it's fairly easy to meet those requirements. But what I want to show you is just how powerful and how different the gain is when you're using spec ID to strategize in tax plan instead of just relying on the default FIFO. So what it comes down to is we know we sold 3,500. Okay, and we know the proceeds is going to stay the same. Capital gains equals proceeds minus cost basis. So the proceeds doesn't change. This is always going to stay the same. What does change is our cost basis. So we want to know, what can we do to change and alter our cost basis so that our capital gain is smaller. So when I'm looking at this, I'm looking for a few things. So one, I'm looking for holding period. How long have they held the asset, short term versus long term? It's important. And then two, do they have any high cost basis, tax loss? Anything that stands out. So when I first look at this, obviously this is an extremely low cost basis. That's going to result in a high gain. And the clear standout here is this one right here, $1.75. That's clearly much higher than the rest. So my starting point is going to be right here. So essentially, that means the first of the 3,500, the first 2,000, I'm going to pull from here, and so that gets us to 2,000 times 175. Times 175 equals 3,500. Okay, so now that I look at the next highest, what's the next highest tax lot? So the first 2,000 is being taken care of here. We have 1,500 more, and I see this 75 cents. That's also relatively high compared to everything else. So I'm going to do the next 1,500 from that, and it looks like they bought exactly 1,500, so that's convenient. So 1,500. The remaining 1,500 times 0.75 equals 1,125. Okay, so we sum these up. 4,625. All right, so under specific ID, instead of just starting from the top, starting from the earliest and going down, we decided we could specifically identify these tax lots, right? These two tax lots as the ones that we were pulling from in order to calculate our cost basis. And so this is the total cost basis, so 4,625. And then we compare that against the proceeds, and we are left with a capital gain of just 4,125. So FIFO, specific ID. This is our gain under FIFO. It's several $1,000s more. Under specific identification, we were able to reduce that gain by over $3,000. When doing this at scale for portfolios of hundreds of thousands of dollars, maybe even millions of dollars, this is extremely powerful. We've reduced gains by over $200,000 before. It is an extremely powerful tool. You definitely don't want to just be using FIFO. At least think about it. At least consider using specific identification. Work with the CPA if you can. It's very, very powerful, and we definitely encourage you to do so. So as a CPA, I don't just stop by finding the lowest capital gain, because I know that there's holding periods, so short-term gains and long-term gains, and they have different tax rates. So long-term gains are much more favorable. You can either pay 0, 15, or 20% of the total long-term capital gain, and that depends on your total taxable income. Your short-term gains, on the other hand, are just taxed at your ordinary income rate. So kind of like your W-2, it's a tax bracket, but it's less favorable than long-term rates. So when doing some analysis here, some of these tax lots were in 2021, some were in 2024. I went ahead and I calculated of this gain here, of this total gain, how much of it is long-term and how much of it is short-term. So if we assume a 15% tax rate for long-term gains and a 24% tax rate for short-term gains, which is pretty typical, I want to calculate the overall tax impact. So that comes down to $225 of actual tax that you owe on the long-term portion, and then $630 on the short-term portion. So we add those together, and overall that comes out to $855 of tax paid, right? This is what you will actually owe, $855. So this is using Spec ID taken from these two tax lots, the ones that had the highest cost basis lots. Now, this is why you might not necessarily want to just use HIFO, because essentially what HIFO is, it's the highest cost basis tax lots out first. That's what we've done here. These are the two highest cost basis tax lots, and those are the ones that we used. But my question as a CPA is, what if we take into account holding period? Even though this one is less, it's not as high as the 75 cents, it is back in 2021. So it would be in the long-term rates, whereas this section down here was only in 2024, so it's getting short-term rates. So now I want to do some comparison. Instead of taking from this tax lot, what if we went ahead and we took from this one instead? So we'll do the math here. We will erase some of this. So we're going to still pull from the first 2,000 units of the 3,500. The first 2,000 will come from this tax lot, and the next 1,500 will come from up here. So times 50 cents equals $750. So overall, 3,500 plus 750, it should be able to do that in my head. 4,250. So we'll just create a bracket here. So we're just going to redo one of these scenarios using Spec ID. So as we said before, the proceeds always stays the same. Minus the cost basis, that's what changed. So we will see this is less than what we did up here. So this one's a bit higher, this one is less. So we get a total gain of 4,500, okay? But the thing here that's different is that this entire gain is long-term. So there is no short-term portion, okay? So the entire gain is long-term, so we'll write that out here. No short-term portion, so we'll multiply it by that 15% tax rate. And that comes out to $675 of tax paid. So as we can see here, we'll circle this as well. As we can see here, even though we had a higher capital gain right here in this scenario than what we did up here, we actually end up paying less tax. So this is why it is extremely important to not just turn on HIFO and call it a day in your tax software. You really need to be thinking about the holding period as well, because long-term capital gains are so incredibly powerful. Just like specific ideas, you got to balance both of them. We can use specific ID to take the highest cost basis tax lots, but we also want to consider the holding period as well, because overall the goal here is to pay the least amount possible. And this method right here is what we would do. This is ultimately what we applied for our client in order to make sure that they were paying the least amount possible. And last thing, guys, I just wanted to say that if you've done tax loss harvesting, it will actually change the scenario entirely. So it's very important that you are aware of what to do in that situation. Make sure that you subscribe. We're going to be releasing another video shortly where we go over exactly how tax loss harvesting in an environment like this will change the tax impact and what you need to do to make sure you're paying the least amount possible. Thank you all so much for watching. My name is Justin. I am the head CPA at crypto accounting firm CountonsheepYT. We do crypto tax preparation, and we are a keep your CPA service, meaning the traditional tax, we'll leave it up to your traditional accountant, or if you just use TurboTax, you can file it with them. We will handle the crypto portion, make sure that you are IRS compliant and audit ready, but making sure that you are saving the most amount of money possible. If you have any questions at all about what we did today or what we talked about, make sure to join our Discord server where you can ask me questions directly or any of our accountants. And if you want to book a free consultation with me, we can sit down and talk specifically about your account for 20 minutes free of charge. Thank you so much. Make sure to subscribe and we'll see you next time.